Stock Trading Course 3. Portfolio. This time the topic for stock trading is the portfolio. Some people call it investment portfolio or especially a stock trading portfolio. Investment portfolio is on the top of overall strategy. When talking about the portfolio, not only include the stocks, there is something else for people's financial security and risk control as well. There are lots of descriptions regarding the investment portfolio, like banks or financial institutions, on their investment-related websites. How to create a portfolio and how to define profitable portfolio, or a better capital growth portfolio for people individually. Some sample regarding the portfolio models. There are basically three models: the conservative, the moderate, the aggressive. In each of these models, the difference is the weight of each asset categories, or percentage of each type of holdings in the whole portfolio model. There should be three major parts of asset allocations, like fixed income security by a lot of fixed income sources. Second should be equities. That means the stock holdings for trading. The third should be the cash or the equivalents, the equivalent mostly for something like treasury. Durable bills or expensive metal holdings such as gold or silver, those material holding or some paper certificates. Or even something like treasuries, artworks, those are the cash equivalents. What people need is to decide these three models regarding percentage of each portion. Let's say conservative model should be most on the cash and the more fixed income percentage, the least on equity holdings or stocks. Moderate model is kind of balancing between the fixed income, the cash and the equities or stocks. Aggressive model is most equities and more income securities, and the least on cash or the equivalents, which likes to take more risks. Cash and equivalents are not really defined as asset, because they don't generate profit and interest rate are really low these days. Asset means whatever can generate good profits or incomes. Fixed income mutual funds, guaranteed certificates, can generate interest or guarantee the amount of profit monthly or yearly, and stock also can increase the price, even get paid by dividends, so those are called assets. Another example, if people own a property, he rent it out, then he collects rental payments, which also defined as asset. Can generate a cash flow, and should be also considered as fixed income in the investment portfolio. So, there are more complicated portfolio models, someone like financial advisors, or whatever in the academic education. They're defined as 10 portion of the portfolio listed as more standard and detailed portfolio. But how to determine a better or most suitable portfolio? Three things to be considered fundamentally. First, if you go to the financial advisors, they will ask your age. That is back to the core question, why you need money or this much money. Because of your age, your life. Let's say your life for living, for family growth, for fun or happiness, for social activity, for luxury vacations, whatever. A teenage life is totally different from the people like 40 years old. A 20-something young people, new graduates, his demand for the life is totally different from the people after 60 who is going to be retired. His lifestyle, their dreams, their hopes, what they really enjoy. The age defines how much money you need, for now and future. How will you spend money? How will you save money? How much is enough, and the best, etc. Second is your financial status, obviously when you put money for investment or to trade stocks. It depends on how much money you have, how much you can use. If you have only $10,000 or $100,000, so how much are you going to put in? From your bank savings account to the stock investment account? It really depends. Let's say you have $50,000 or you have $1 million, that's totally different. The third is time. How much time you are going to spend on the investment or stock trading in daily or weekly life. Some people do it once a month. Some people do it like once a few of months, even a year for 1 hour or few times a year. Up to your style as a trader to spend how much time to take the investment review or risk control. What's your lifestyle or your strategy? How much risk you can take? What is your psychology limits or tolerance? Some people say, if I don't look at the stock every day, I cannot go to sleep. If you turn on the computer, look at stocks, just 5 minutes or 10 minutes for a single stock, you know current price, how it is moving, and you are thinking about its direction, up or down. For the portion of the investment for the equity, actually as a stock portfolio, what's your favorite of sectors we are going to buy? What kind of ETF? You are more like the Nasdaq stocks for technology, or you are more like a Dow Jones stocks as traditional industry or business? Or you are more like dividend distribution stocks for income basis or reinvesting? These are to define a stock portfolio. One more very interesting topic is how many stocks you should buy or hold for your portfolio. Let's say some people buy 5 to 10 stocks, some people buy up to 20-30 stocks. My recommendation is less or around 10, and related to people's lifestyle, market situation is bull or bear. How much money and how much time they can put in for the stock trading effort as well. Thank you for watching, wish you learned something and good luck in trading.